Okay, folks, welcome to Thursday Night Stock Charts Live. This is Bob Desmond, and it is 6 p.m., April the 2nd. RL, Richard, Cherry, Franklin, Jay, hello, everyone. Some familiar names out there. Good to see. What we're going to talk about tonight, I want to kick things off with a bit of market psychology, and then I want to talk about our favorite short, not for the short term, but this is more so for the very, very long term. I'm going to go to that in a moment. Then we'll take a look at the charts on a weekly basis. How do we appear poised to close out the week with one trading day left to go? And we've seen many times in the past that one day can make a big bit of difference. So just because it's Thursday, one more trading day left to go, the weekly charts mean a lot, but a lot can change by the end of business tomorrow. Hey, Patrick. So let's talk a bit about psychology. And this is the curve that really, it just speaks 1,000 words. This is when you knew when the markets were becoming irrationally exuberant, to steal a phrase. And this goes back to only a few short months ago, really not that long ago. Then you had delusion. This was January through February. I was coming on here and I said, I cannot believe, you can go back, hey, Eric, I cannot believe that with the news that's coming out, that the markets continue to press on to new all-time highs despite the fact that we have a locomotive that's heading right for our supply chain, and the markets don't care. They're not getting it. I have videos all over YouTube. Go back to January, February. I was warning about it. So we were in delusion. And then as the events began to unfold, you saw denial, right? Uh-oh, this is the Wile E. Coyote moment. We're running off the edge of the cliff and we realize there's no ground underneath. And then we get clubbed over the head. So where are we today? I think that we're right here. We have a lot of people out there that want things to go back to normal. We have a ton of monetary and fiscal stimulus. And one would think with all the money that's being pumped into the system that you would get a return to normal. But despite all of the money that's been pumped into the system, that will be pumped into the system, we still get headlines like this. Instead of firing everyone, Boeing offers voluntary buyouts to its entire workforce of 161,000. Unemployment numbers skyrocketed this week. They're going higher next week. Factory orders had already been declining prior to the CCP virus. For those not familiar with what CCP stands for, I'll go to that in a moment. That's what I'm calling it moving forward. U.S. labor market in free fall. We already know this. 10 million Americans have filed for unemployment in the past 2 weeks. This is, without exception, recession. Whenever we've seen a spike, and nowhere near this level, whenever we've seen a spike in unemployment claims like this, it's a lagging indicator. We are in recession. Have no doubt about it. So, going back to where are we? Again, I think we're right here. I think what the markets may be doing is holding this market in check until they can forget about earnings. Earnings mean nothing. They're going to be looking for forward-looking guidance. Where to from here? And news out of the manufacturing sector is not good. I don't know anywhere where it is good, with the exception of very few micro sectors. Zoom, for example. Some of the food good companies, for example, Kellogg. Other than that, We're looking for a rollover here. I do not think that we've hit the lows yet. Let's get to my favorite short. And before I do that, I want to plug, I'm going to go live tomorrow morning. I think I'm going to go at 8 a.m. tomorrow morning. It's different. Usually I go live at 5 a.m. I'm going to go live at 8 a.m. tomorrow morning. And I want to talk about valuations and where we stand historically. And this is a chart primarily I'm going to be discussing as well. So if you can, join us tomorrow morning at 8 a.m. Eastern Standard Time for swing trading today. Let's talk about the truly big short that I'm going to be looking at. And I want to begin with, Warren Buffett talks about how bear markets or recessions show you who's been swimming naked for a while. And I don't think that applies only to the financials. I think it applies to the media and to other really, really slimy organizations and countries for that matter. And this is off of NBC News. This goes back to the 26th. And this is their headline. This is how corrupt they are. Or delusional, one of the two. As U.S. struggles to stem coronavirus, China asserts itself as a global leader. This is the country, China. This is the country that back in January, after they told the president, that there was no evidence of human-to-human transmission of the CCP virus, they were also scouring other countries, including Australia, scooping up medical supplies that they knew eventually that they would need and hoarding them, bringing them back to China. And despite the fact that China offered help to Spain vis-a-vis medical testing kits, they were faulty. The Spaniards had to send them back. Spaniards. That goes to my history. They were faulty. No good. No bueno. They've corrupted the World Health Organization, the Japanese VP, and the Japanese are usually polite people. The World Health Organization should be renamed the Chinese Health Organization. We, the United States, are the top, number one, supporter financially, as no shock there, of the World Health Organization. The Chinese, roughly two, they have subverted the World Health Organization. Fast forward to China's PMIs. In red, the manufacturing PMI, Purchasing Managers Index. In blue, the non-manufacturing, the Services Index. Last month, plunged. Honest numbers. This month, guess what? They're back in expansion. Go figure. These people are the most corrupt. And I'm not talking about the civilians. I'm talking about the CCP, the Chinese Communist Party. I don't think that after, and this is why this is a long-term trade, I don't think that after this is all over and done with, during the look-back period, and we shake our heads and we just say, what the heck just happened? And how do we avoid it ever happening again? I do not see how the CCP maintains the power, the dominance that they have in manufacturing moving forward. I think that on the home front, what they've done to their population is horrendous. And as their economy comes under a huge amount of strain and their divorce rates are ripping through the ceiling and that baby boom they were hoping for comes to an end, that they're going to have trouble not just on the international front because they have, pardon the phrase here, screwed the world, infected the world, but they've also set the stage for mass disruption on the home front. So is this a trade that we want to put on today? No, we've already traded the short ETF Yang. We booked our profits here. We were short of China a few weeks ago. We booked those profits probably a little bit too early. But I'll be eyeballing the Shanghai Composite. And I want you to take note, and granted, we're only day 2 into the month. Take note of this monthly chart of the Shanghai Composite Index. The stochastics are making lower highs, and we have both lines on Stokes down below the 50 mark, losing momentum. Now, for all I know, heck, we're going to go screaming back to all-time highs by the end of the month on the Shanghai Composite by the end of April. Highly improbable. Highly improbable. In all probability, we are going to see a continuation breakdown here, probably mid-month, because what happens when you have a loss of momentum on your stochastics, especially when they're down below 50 and declining, rallies tend to fade. I say this constantly, but honestly, it's one of the sayings that it never gets old. Rallies tend to fade. I would be looking to fade any rally in the Shanghai Composite, because I think ultimately, whether it be this month, this quarter, this year, or next, we are breaking down to new lower lows as the world backs away from a CCP-led mainland China. And we will look to Yang, the leveraged ETF, putting you short of China. I think we go lower here on YANG. Why? It's because all you need to do is take a look at a daily chart of the Shanghai Composite. And it traded today with the Dow Jones, the S&P 500 as well. Outside reversal day, in all probability, we're going to move up higher here before we ultimately fade. So that is our short moving into the probably mid-quarter, possibly the end of the quarter. We'll see how powerful a move this is, but I do think that we are going to fade this rally. Let's get to the weekly charts and see how we're about to close out the month of, or the week, I should say, the month of. Let me transition over. Hey, the power of technology. Okay, so let's, I'll go through the major averages. But first, I want to go to the yield curve. And the yield curve was steepening dramatically. It has backed off. I don't think we're going to collapse here. I think we're going to consolidate because we got a little bit overdone. But I do believe that we are going to continue to steepen here on the yield curve. What's that going to do well for? What's going to do well? Gold. The gold miners. They're going to do well. Silver. We're long of silver. We're long of the gold miners. They are going to do well. The stock market, not so much. Let's take a look at the dollar. Has this refreshed? Actually, this is the 10-year yield. We're pressing down lower on the week, spot 63%. Somebody said that we're expecting spot 25 on the 10-year yield. I don't know about that. I think they're extrapolating out a little bit too much here. Meaning if we break down to a new lower low, I don't know about that. Here's the dollar. Now, I want to point out something on the dollar. This is not updated yet for today's close. I want to point out the fact, and we were talking about this at the end of mid-March to the end of March. I was worried about the dollar and it breaking out. And we did sell off the end of February very, very strong. However, when you take a look at the dollar, we did, in the month of March, we did break out of this triangle formation. Now, we didn't close at the highs of the month. I'm not predicting we're going to shoot to the top of this range this month. We may, because the Eurozone is just such a mess. What the Germans have done to that union in these short couple of weeks, thumbing their nose at the southern countries while they were asking for help, and ultimately got that help primarily from the Russians, the Cubans, and the Chinese, who, again, couldn't help but shoot themselves in the foot. They went to other countries other than their European Union members, or they tried to get help. It wasn't there. So that's not going to bode well for the euro, especially after this is all said and done with. And I think that despite the efforts of the Federal Reserve Treasury to try to weaken the U.S. dollar, I think that the European Union is the best thing for the U.S. dollar. So while a lot of people are out there, Peter Schiff, one, and I understand his rationale of as to why the U.S. dollar and ultimately will weaken up here, as long as the European Union continues to shoot themselves in the foot, weaken itself from within, they're going to keep a bid under the U.S. dollar. The Volatility Index, weekly chart. Let's refresh this. Okay. So I spoke about this over the weekend, and we were looking for volatility to come off. And I said that what we were looking for was a rally in gold, rally in the gold miners, and weakness in the stock market as volatility came off. We've had volatility come off. We've had gold rip through the ceiling today. The gold miners are catching a bid. They're moving up now. They're positive on the week. The only thing that's missing is that the stock market continues to move higher. But again, I will draw your attention back to where I believe we are on the curve. We're right here. Everybody wants to go back to normal. You're going to hear it over and over and over again on CNBC. Dollar cost average. Buy stocks now. Historic opportunity. Those who forget history are condemned to repeat it. This is my third bubble. I can go back to the charts. I could point this out over and over again. This is the way, in all probability, it's going to pan out. Don't listen to these thugs. These fund managers who can only be long the stock market. They can't short, and they can only have X amount of money in cash. They have to be fully invested, so they're going to jawbone this market higher as much as possible. They must talk their book, and God forbid the financial news media were to hold them accountable and ask them probing questions about their positions. What else do we want to look at? The Dow Transports weekly basis. Do we want to buy the Dow Transports here? I think not. We're flashing topping action. Resistance back here in September of 2016 is firm resistance today. What was support and resistance in 2016 is back. It's back again. And it's going to continue to act as resistance. The Dow Jones Industrial Average weekly chart. Big move higher today. Let's take a look. Outside reversal day. Looks exactly like the Shanghai Composite Index. It moved higher. We'll probably take another run at the 20-period moving average. I spoke about this over the weekend. This declining 20-period moving average would act as the initial obstacle for this market to continue higher. You're going to have shorts leaning into it. What happened? Shorts leaned into it. Go back to Sunday Night Stock Charts Live. We spoke about this. Now they're going to make another run for it. Would I be shocked if we gap down tomorrow morning, limit down? No, I would not be. Counter trend bear market rallies are the most ruthless rallies to the upside. And just when you think that, man, I'm missing out here. My FOMO, that fear of missing out, it's so dangerous. You may have stopped out earlier in the week. Now you see the market going up higher yet again. You're going to jump back in, chase this market up higher. Folks, it's not going to end well. Follow the trend. What is the trend? Has anything changed? Simply take a look at the monthly chart. We are below last month's closing lows. We haven't made a new lower low on the month, and we may not. We have stochastics very, very weak. RSI very, very weak. Weekly chart. That's not a weekly chart. Weekly chart. Here we go. We were higher on the week. 22,500 is stiff resistance. We are off the lows of the week, to be fair. Is this a chart that I want to buy? Have my indicators bottomed out here? I don't think so. I don't believe that we are going to, like in times past, see a V-shaped recovery. It's not in the cards. The reason is that we have zero idea what corporate visibility is at current. So how do you value this market? We went out of 2019 overvalued on the market. Going into January, the end of January, we were overvalued on the market. We came off of those overvaluations in February as the realization that, wow, we have a problem here began to take hold. But now we have no idea what revenue, forget about earnings, what will revenues be? And how will the market price this in? So for those that are going to tell me that we have seen the lows here, I find that hard to swallow. Maybe we have. Maybe we have, for all I know. But the probability of us seeing a low with all the unknowns out there and the market being a forward-looking pricing mechanism is highly unlikely. Tesla's up $80 from close. It's probably because Chanos earlier today said he was still short. Hi, Kat. TA. Pre-drag. Hey. Welcome. Steve, I got you. Okay. All right. So let me just write down Steve's request there. Small caps, weekly chart. You know what? Honestly, why would we buy this chart? The first thing that comes to mind here is this. And maybe tomorrow, folks, maybe we'll have a bullish engulfing, a bullish key reversal on the week. But I doubt it. It's highly improbable. I think that what we're setting up for is a nasty bear flag setup. Maybe it'll break next week, maybe the following week, who knows? But it's going to break. And at the bare minimum, what I would expect here, before we could say, you know what, coast is clear, we're all good, right? I think the bare minimum we need is a retest of the lows. We got that back in 2016. At least we can expect that now. So would I be a buyer of this market expecting passive income on my investments, buy and hold? No way. No way. I have no idea if my dividends are safe. No way. So what are we doing? We booked profits yesterday on a short trade. Today we opened up on market strength, 2 new short trades. Nibbled on them. Now, the reason why I didn't go adding more into the close is because what did they do? Let's bring up the trip cues really quick, because this is what I was watching. Let's go to a 5-minute chart. This is how you know the government was in there. Look at what they did here. In the final 10 minutes of trade, they spiked the trip cues up to 190. Think about that. And who was up there? A ton of sellers. selling in, getting liquid. What are we shorting tomorrow? I doubt tomorrow, maybe. I doubt it. I'll be looking for, I think the price action that we saw today was a bullish reversal, a bullish engulfing bar, a bullish engulfing. That in a healthy market, the probability of a higher high tomorrow is very, very strong. Very strong. Could it be a head fake? Maybe. I wouldn't rule it out. It's a bear market rally. Anything could happen. Bear market rallies are met with horrible, horrible disappointment for those who chase it. Right? So we're definitely not going to be buyers. Might we be leaning into the short side tomorrow? Maybe. It's possible. Ideally, I'd like to see how we close out the week. So in all probability, especially since what I'm seeing here is with the game they're going to play, is that if they plan on spiking the market at the close to try to get shorts to cover and create a short squeeze to keep this what they want you to believe is that you have institutional buying at the close, right? You don't have that. What you really saw today, in my book, was institutional selling. I think that what this was, the plunge protection team going in there, dumping. They're buying ETFs. And then what happened? Institutions wanted to get liquid. They took advantage of it. So this to me is a greater tell that we couldn't hold this rally than the rally in and of itself. There are sellers above here. And again, we're not going to take a look at 5-minute charts. We'll use a daily chart as a mechanism to identify when we believe that we're going to see more selling. I mean, the trip Qs today didn't look like the Dow Jones. The Dow Jones closed near the highs of the day. What happened here is that you flashed a bearish topping tail. This does not get me excited. What I want to do now is I want to take my crayon out Where are my trip cues? Here, we'll just make a new one. Only when I'm live. Pressure! Pressure! Okay. So let's do this. So here is our upper band of resistance. Here is our lower band of support. This is all very, very easy. We're not rocket scientists here. I'm not a day trader. I'm a horrible. I don't even try to day trade. Horrible, right? I overanalyze. I need sit back with a cup of coffee at night, maybe an herbal tea if I've had too much caffeine in the daytime, and I need to study my charts. That preps me for the next day. So what I'd be looking for here tomorrow, and I hope they do it. I hope they do it. I hope they limp it back up. Look at the volume here today on the trip Qs. Horrible. I hope they limp it up on ever declining up volume. If I see that, I may lean into the short side of whatever index or stock I'm looking to short. Right now, we're in no man's land. I have no idea what they're going to pull next. So all I know is that me as a short, I have a target on my back, and that's the federal government. They don't want this market going down. So we need to keep that in the front of our minds. Do I believe that ultimately the markets will prevail and we will see lower lows? Yeah, we will. I mean, look at the countries where they've banned short selling. What did the markets do? They went down. Countries that went in and bought stocks. Look at the Japanese. What happened? They went in and bought stocks. What did the markets do? They went down. So while these short-term initiatives can help in the short term, longer term, the markets are going to price in fair value. What is fair value? And we'll get there. Before we leave the trip cues, take note of the 50 period. It's looming. We're going to take out the 200 period moving average. Maybe they'll hold it in check here. But this, ultimately, when it does cross down below the 200 period moving average, is going to act as a declining ceiling. and it will act as a target at which, when we rally up and into that 50-day moving average on whatever you're trading, trip Qs, spiders, whatever, it's going to act as a declining ceiling, and people are going to lean into the short side, like me. So I can't wait for it to happen. And folks, before I forget, I haven't done this yet. I'm supposed to do it. I'm a bad YouTuber. Can I ask you to hit that like button, if you would, please? Thank you very much. Share with a friend. Hit that subscribe button. I'd really appreciate it. The channel's gaining some traction. I really get some value out of doing this. I hope you do as well. And leave a comment, please. I'll get back to you. All right. Let's move on here. Oh, I wanted to go back to the Dow really quick. We closed at the highs of the day. Let's go to... And I want to just point out, people don't pay attention to volume enough. And you'll hear people on Stock Twitch, and volume doesn't matter anymore because of the dark pools this, and get out of here. It's ridiculous. Volume matters. Volume, we were up today nearly 2.25% on the day. Volume barely met the moving average. So I can't get all too excited about today's price action. Will they probably move it higher? Probably. Will it last? Improbable. Taking a look at the banks rally today. This is a weekly chart, though. Would I buy the banks here? No way. Especially, I know people are out there looking at REITs for their yield. Be careful what REIT you're investing in. I mean, I don't know if there's a safe REIT out there. What are you going to do? You're gonna invest in a commercial REIT? Store frontage? Who's going to be in business? Cheesecake Factory. They helped kick off this rent strike thing. They sent out a communication to their landlords. For the month of April, we're not going to be paying rent. What are they going to do? Get kicked out? I don't think so. And what happened? The millennials took it and ran. We're not going to pay our rent either. So what does that mean for the residential REITs? This is what happens when you get bailouts. People feel entitled. So, and believe me, my heart goes out to people, but in the Great Depression, you didn't have rent strikes. So would I buy the banks here? No way. Lord knows what's coming from them. Daily chart. Let's see how they did today. And especially the regional banks. Avoid the regional banks. I mean, what are they going to do? Make money on loans? If they get paid back on their loans? Look at the 10-year. There's no spread. They have no NIM, net interest margins. And they can't trade. Banks on a daily basis, an okay day. It's an outside reversal day, technically. But look at the volume. How can I get excited about this? Will they move up higher? Sure. Watch the volume. That's key. Technology, which I hate. In this phase of the cycle, again, for those people just joining in, we are here. We just went from delusion and denial to counter-trend rally. We're hoping for the best. Most people aren't preparing for the worst. That's what we're doing right now, preparing for the worst and hoping for the best, right? Great. If things get back to normal, great. If we make if we begin to break out in the markets, put in a higher low, and then we break out to a new higher high, do I have to stop out of my shorts? You bet your bottom dollar. And am I hoping for that? Sure. Why not? It helps out the country. I'm a patriot. Okay. We'll do great on our gold stocks. Inflation's coming. Our gold mining stocks will do well. Silver's doing well. I'll do well there. We'll make up for the losses on the short side. I hope everything goes back to normal tomorrow. Believe me. That being said, it's highly improbable. And that's what we want to deal with. The probabilities, not the hope and the feel-goodiness. It's not reality. So we are here. Counter-trend rally. Watch for the rollover. Here's where we're at right now. Counter-trend rally. Looking for the rollover. Do we break down to new lower lows? Probably. But at best, we're looking for a higher low and a retest of the March lows. So technology. We're off the highs of the week. We had our head fake. Would I buy this sector? No way. This phase of the recession / depression, I think we're in depression, and we'll probably be in recession probably, whenever, a couple of months after the new cases subside here in the United States. This phase, you do not want to be long of beta, volatility. You don't want to be long of growth. That does not do well during this phase of the recession, this cycle. It's not where you want to be. Utilities will begin to do well at some point in time in the future, especially with yields down this low. Why? It's because the utilities, their input costs go down at this phase of the cycle. Why? Look at oil. Look at natural gas. Look at coal. Coal's been cheap for years. Natural gas, historic lows. They really don't use oil that much. But nat gas, input costs low. The problem for the utilities right now is that who's going to pay their bill? And also, you have the industrial sector not using as much energy. What's happening? The utilities are taking it on the chin along with the rest of the market. I would argue that the utilities would be doing a lot better. We're long on the utilities right now. We would be doing a lot better because of the yield. It's so high on them at current relative to their borrowing costs. So what they're going to borrow to fund their ongoing business concerns, maintenance and whatnot, they're capital intensive. They have to float bonds. With yields as low, they pay a lot less on their bonds. So they're paying big fat yields. The institutions are going to love them. Why? It's because they're paying those big fat yields. And you have passive investors that are going to be yearning for yield, especially since all these companies are going to go to the government, take their money. Guess what they can't pay out? Dividends. Where are they going to go to? The utilities. So I think that's a longer term play. We're going to look to build on the utility play. I don't think that they should be bought right now. I think you could nibble. We booked some profits last week. So I can't buy this right now. I want to. I can't buy this right now. Because of the unknowns, for no other reason. I think that after earnings come out and we get the worst of the worst news, especially horrible looking, forward looking guidance, then you want to pounce. That's the contrarian approach to the utilities and for the most part the rest of this market as well. So looking at it on a weekly view, we have made 3 consecutive weeks of higher highs. Right? Can't be ignored. People are out there saying, hey, look at that, Bob. Bob, think about this. Think about this. Think about what you're saying here. We have also put in 2 consecutive weeks of, assuming that we close above last week's lows, which I think that is highly probable. A counter trend rally was due. What we're looking for here is a rollover. I believe this to be heavy resistance above. The market is sending you a signal that these buyers back here and through here, they want their money back. That's it. So you're going to see a rollover here. If you're looking for a yield for the longer term, wait for that higher low on the utilities. Then go pouncing. I will. Then put your capital to work. Not right now. The market's saying avoid like the plague. This is the value of the charts. Let the guys on CNBC blow smoke up somebody else's butt. Watch the charts, please. The charts are telling you, expect lower lows. You have a lot of sellers up here looking to get made whole. What else do you want to take a look at? Energy. That's a good one to look at. So energy's coming off of its lows. It's actually diverging from oil, which is interesting. So oil did pop today, but it's been down week over week. And you've seen a back-to-back, assuming that we close positive tomorrow, a back-to-back up week in the energy sector, which is rare when it diverges from oil. And I do believe that we do have probably more upside here on oil. We did close off the highs of the day today, but we are due for a rally here. Yeah, these strokes are like a coiled spring. Look at how we rallied right up into that 20-period moving average. What do? We backed right off. So watch for a higher low. And we'll keep an eye on oil. And we'll probably trade the leveraged ETF. I forget the symbol. That gets you long of oil. I know one of our members, Eric, is long of the one that trades on the Toronto Exchange. Eric, I don't know if you have I know Eric's on here tonight. Do you have the leveraged ETF putting you long of oil on the, I think it's traded on the Amex, whatever, it's traded in the United States. But we'll look to get long of that leveraged ETF. Emerging markets. I don't think you could touch emerging markets yet, with the exception of HOU. Is that the Toronto one, or is that I think that's Toronto. Well, my chart's not going to work for me now. Only when I'm live. There we go. Yeah, this is a Toronto symbol. Canadian, right? Okay, thank you. All right, so whatever the U.S. one's going to look very similar to this. All right, so we popped up higher today. What we want to do is take our crayon out. Right? Play connect the dots. I think that we could pull back here, and it probably seems highly unlikely that we're going to do it, but it's what I'll be looking for, is that we pull back and do a retest of on or about probably this 530 mark, maybe intraday, and then we'll bounce off of it, leading to a rally, short squeeze. A lot of shorts in oil, leading up to a short squeeze in crude prices. That's the play I think is going to happen here. Today's price action leads me to believe that you have a ton of sellers above, and we need a pullback, and we need another running start at the 750 level there, give or take a couple of pennies here, and then we'll break through it. Gold, this has got to be updated by now. Yeah, it's updated. Okay, this is the closing price as of today. Gold, folks, we've been steadfast in our opinion that gold, in all probability, is going a lot higher. Ultimately, I think the outcome of whatever fiasco we're going to name this, because people want to blame the CCP virus for what's happening right now. Let's face it, it's not. This was a pricking of a debt bubble. The economy was tanking well before the CCP virus hit the news. So, and factory orders prove that today. So, gold has been on a tear. Gold was up last month. It was up. This is a doji star formation. We did give back some of the gains, but we took back a lot of the losses. And this month, we are up so far, obviously early in the month. So we were up last month. What did we do on the SPX? What do you want to own? Gold or the S&P 500? The gold miners? They traded down with the rest of the market. But we did analysis. Go back to Sunday Night Stock Charts Live. I went over analysis of what we were looking for. We were looking for volatility to come off. What did volatility do this week? It came off. What happened? Gold and the miners rallied. The stock market was down yesterday. What did the gold miners do? They rallied. That's what we're looking for. It's beginning to happen. You got to start thinking about this now, because when you get gold, forget about a new yearly high. Once we hit, because remember, there's a shortage of physical gold. Once we hit new all-time highs, and with mining capacity down because of the CCP virus, this is going to be all the headlines are going to be able to talk about. And ultimately, the outcome of this nightmare that we find ourselves in, this debt crisis, currency crisis in the making, there's going to be some sort of a repegging. Whether it be, I doubt it's going to be 100% to gold. 30% like it once was, maybe. But there's going to have to be a repegging to gold. And one way the Chinese could eat our lunch, with all the gold that they've been buying over these past years, preparing for this, they could repeg the renminbi or the yuan, whatever they call it. They could peg a portion of their currency to gold, and you want to watch that thing spike. I doubt they'll do it, because their exports will go like this, because the value of their goods will skyrocket. We won't be able to afford it. I doubt they'll do it. But if they really wanted to knock us flat, they would do that. But they'd also take themselves down as well. Farias, do you think you can see a short squeeze in the value of the U.S. dollar? Huge flux? Yes, I do. Yes, I think there's a shortage of U.S. dollars globally, but the Federal Reserve is printing them hand over fist as well, or the Treasury, I should say. And nobody puts, nobody puts 100% in gold in terms of backing of a currency? Yeah, I agree with you. Except historically, that hasn't been the case. Remember, one time you had gold coins, pure gold coins. That's what the Roman Empire was built on, silver coins. And then all of a sudden they started filling it up with copper and whatnot, and then that brought down the Roman Empire. So at one time, yes, there was. Oh, UCO. Thanks for that, Pat. That's the leveraged ETF of oil. Thank you, Pat. And this is probably traded on the Amex. Oh, it's on the NYSE. Yeah, same price action as the other ETF. Expect a pullback. All right. What else do you? We already went over the Dow. Let's take some chart requests. I have about 12 minutes left. I have a list here. Let me see. Manoj, hey brother. Buy GDX now or wait for a pullback? We have a lot of it. Oh, not the GDX. We have the NUGT and we have the GDXJ. We bought more earlier in the week. I'm fine. I would watch, since we're so close to the close of the week, I would wait until Friday. Let's bring up the chart. Let's talk about it. I would wait until as close to the end of the week as possible to see whether or not we close the week out as strong as it appears that we may. The only concern I have is that late day today, you did see some selling come in, and that was a bit of a concern. But other than that, in the after-hours session, NUGT was back up above 8. Let's go to a weekly chart here. I would wait, because just as I've expressed concern about the major markets rallying and hitting resistance levels in prior weeks, you saw the same thing here on the GDX. We have resistance above. Right there at 25.94. Where do we close out the day? 25.12. We're close. What would I rather see? I would rather see a pullback and a retest of this week's lows. Maybe next week. Now, if you're chomping at the bit and you're saying, I got to get involved here, I'm feeling this, I'm feeling that itch. All right, so that's a dangerous itch. Scratch the itch. If you're planning on buying 100 shares, buy 10. Get skin in the game. Say that you did it. Pacify the urge. Then wait. Watch for a pullback. Now, what I will point out here is that on a weekly chart, and this is some bullish stuff here, if you weren't buying the miners prior to this week, you got to pay attention to what's going on here. We're seeing a higher low, assuming that we close strong this week. We're seeing a higher low on the slow stochastics. This is bullish stuff. So, we're near resistance here on the GDX. Scratch the itch if you want. I would wait until late day tomorrow to do it. Let's take a look at the daily chart. We gapped up higher today. It's okay. But take a look at what happened in the final minutes. They hammered it. I don't like to see that. So this is why I'm saying, this is why on Thursday nights we talk about the weekly charts, but we don't really know what the end of the week is going to bring, because we don't know, just as we know that the 3 p.m. hour allows institutions to set themselves up for the following trading day, Friday, the back half of the day, allows institutions to set themselves up for the following week. So we want to keep that in the back of our minds as we're preparing our strategy for next week. And you're a member, so you're going to be getting the weekend commentary on Saturday this week. And we'll go over the closing price action of the miners, everything that we're going over tonight, we're going to go over again, and then some. So I don't like the closing price action today. They'll probably rally it tomorrow morning to try to recapture the support level. Let's see how we close. Do we fade or do we rally? If we rally, very bullish. If we fade, not so bullish. So let's keep an open mind. That's what I'm saying. I'm very bullish on the gold miners longer term. I'm not going to speak my book. I want the gold miners to rip through the ceiling tomorrow morning. I'm not going to speak my book. I won't do that. Let's go to, you bet, Manoj. Anytime. Barrick. All right, I'll see if I have time for that. Pre-Jag, TNA. Okay. Norris, hey, brother. Does NUGT becoming a 2 times rather than a 3 times limit the upside? No, it doesn't limit the upside. It limits the ability of it to reach whatever price target you're hoping for at current to be achieved by a third. So any price target is still achievable. It's the rapidity that we're able to get there. So I'm not happy with Direxion. They're going to get their act together. And that's the sole reason why I decided to buy GDXJ, was to diversify away from the Direxion funds until they get their act together. Farias, what I meant was, I think we'll see the dollar go up in value. I agree with that. In history, global recession causes dollar to go up. Short term, yes. Due to demand, yes. But ultimately, you get a rollover on the U.S. dollar. What we're seeing right now is a repeat of what we saw in 2008, right? The global economy began to melt down. You saw a rally in the U.S. dollar. However, that rally ended and we went into one of the biggest bear markets in the U.S. dollar in history. So I agree with you. I'm agreeing with you. $120, that's a big price target, but I'm not going to argue. We are in unprecedented times. If you would have told me we're going to see spot 6.2 on the 10-year yield back in December, I would have said you're nuts. But here we are. All right, so I won't argue with anyone right now. You bet, Norris. Okay, let's INSG, Pat. You got it. Okay, let's bear with me while I take a sip of water, please. I could talk all night long, but I do need a sip of water. Forgive me. Okay, let's move on. And for those folks just joining in, if I can ask you to hit that like button, subscribe, share with a friend. Subscribe to the channel, please. I beg of you. I see these kids out there. Oh, my God. They do these great thumbnails to lure people in. How to make, what's my favorite? Every day, it's like a different variation of how to make $100 a day day trading. And I take a look at their view count. It's like 13,000 views, and they have 20 videos out there. It's shocking. Anyway, I digress. I apologize. It's my anxiety. It's crazy. Anyway, I move on. All right, so the first up here is going to be a REIT. And again, folks, I have no idea what is to come for the REITs. And I have no idea. Well, it looks like this is it doesn't say residential. Oh, it is a residential. Yeah, residential real estate. Okay. So I'm assuming, given the name, that they are in the residential real estate market. You know, whether or not this rent pay strike, whatever they're calling it, takes hold, I don't know. It makes me worried. We are much closer to the lows of March on this REIT than we are on the S&P 500. So we're seeing relative weakness here versus the S&P 500. On a weekly chart, at current, we have an inside bar. We have not been putting in. Remember that we've been putting in higher highs on the averages and higher lows. But what do we have here? We're just stalling out. Right? So I get nervous when I see this. You're underperforming the S&P 500. I'm just waiting for a break. So if I'm of the school that I believe that the S&P 500 is in a bear market rally and ultimately it's going to roll over, then I have to believe that if you have a REIT that's underperforming the S&P 500, that it's going to break in all probability prior to, and if not prior to, the S&P along with the S&P 500. So I'll be looking for a break of this lower band of support. I don't like it on a weekly basis. Maybe it'll rally back tomorrow and prove me wrong. And then we'll reevaluate. We were down on the day. So we are in a wedge formation. I can't buy it here. We may, on an optimistic note, we may be putting in a higher low on RSI and on Stokes. Maybe. But today we flashed a bearish reversal bar. A bearish reversal bar implies that in all probability we're going to see a lower low. So right now I can't buy these shares. It's REZ. Next chart up, Baidu. Chinese stock, CCP. Oh, not loving mainland China right now. All right, we'll come back to the daily chart. We'll go high level. All right, so we're up on the month. Would I be shocked if we rally up to this upper band of resistance at 122? No, I wouldn't be. Where do we close out the day? 99.58. So we may have some fuel in the tank here to send us higher. May. Weekly chart. So on a weekly basis, we recaptured the support level. We're off the highs of the week. I'm not a big believer in U and V-shaped recoveries on my Stokes. I'm a huge believer in looking for a W formation, a double bottom setup. We're nowhere near that yet. So I think that what we're seeing right now is much akin to what we're seeing on the major averages, and that's a bear market rally. Daily chart. Now, here's where things get funky. Last time I went over this, I pointed out that I believed that we were in a dead cat bounce or bear market rally. What did we do? We broke down. I warned about this. We broke down below the lower band of support. Now, we have bounced back a little bit. 101.40 is the line in the sand. Were I short, I'd have to consider covering my short of Baidu on a close above that level. Would I initiate a new short position? Probably not. What I would do, rather, is wait for weakness and watch for a break down below this lower band of support. I would lean into the short side, assuming that the S&P 500 was trading down as well. I don't want to fight the market too much right now, but if the S&P begins to roll over yet again, Baidu, I think, is going to take it on the chin as well. Plus, it's a mainland China play. Ultimately, I think it goes lower. TZA for Eric. Eric sent me an email. He's one of our members. Asked me a question about, because we're shorting different leveraged ETFs, and I did like TZA prior to the, back here I liked it. And I never jumped on board. I missed out on a big rally, all right? We were short of Amazon. We had other short positions on. We were short of China, but we did not open up a position here, even though I did go over it, and we never got on board. We live to play another day. Do I like TZA here? I like it, but I got to put logarithmatic on. I like it, but not right now. I think that we are in a short squeeze. They're going to fuel the market higher. Allow TZA to come to you. Whatever short vehicle you're going to use, it's fine. You want to short the small caps, short the small caps. 6 of one, half dozen of the other. I like to use a mixture of both. I'm focused more right now on leaning into technology. I think that technology during this phase of the growth cycle is persona non grata. You don't want to own it. So I'm shorting that sector, which historically does not do well. The small caps had been doing well. Remember, they never made new all-time highs, while the S&P 500 has. So I'm not as enthusiastic about shorting the small caps as I am about the large caps, because I don't think that they've had their day of reckoning yet. Whereas the small caps, I think that they are going to probably move down lower. I think that the opportunity to see more alpha right now lies with the large cap names, particularly technology. Xing out, Zoom, anything related to that area of business is going to do well right now. And probably after all this is said and done. You think about it, you have your business planners, reevaluating how they did business during this crisis. And you think about, wow, look at all the travel and leisure that you saved on. And you could pump that into buying more technology and, making that the new normal, jets and stuff. And I think that's going to happen more and more. And honestly, this work from home thing was already taking root in a very, very big way prior to this becoming prevalent over a year ago. So back to the TZA. Would I buy it at current? No. Because at current, on a monthly basis, you're right at that 200 period moving average. I still like RSI. Stokes look beautiful. I think you're going to get pullbacks here, though. Weekly chart. We're off the highs of the week. We are higher on the week. This is really wonderful support here at 58. Daily chart. All right, so what we're doing here is we're hanging on by a very thin thread. We're in a trading range. We gave up support earlier. They tried to rally it. It failed. All right, we're barely holding on to the support level here. Given the price action of, let's bring up the IWM. Again, cheap plug for tomorrow. I'm going to be going over this chart, the valuation of the S&P 500 tomorrow morning live on Swing Trading Today, 8 a.m. Eastern Standard Time. And hit that subscribe button. You'll get notified when I go live. Or there's a link on the website. Actually, an email address, an email box on the website. Enter your email address, and I'll send you out a 15-minute alert. And we'll go to IWM. That's my cheap plug. I wasn't prepared for it, so I fumbled my words. Embarrassed. All right, so IWM closed okay today, but did not close wonderful. So honestly, this is not a wonderful chart today. We closed well off the highs of the day. I bet you what they did is they went in, the plunge protection team, and they were buying up the IWM, trying to pump that market. Although you didn't see the sell-off that you did on the Qs. So maybe not. It looks as though we closed well off the lows of the session. We may get pumped up higher here tomorrow. So I wouldn't go buying the TZA just yet. I would wait. Wait for a pullback. And what may happen here is that we pull back here to around $62 per share. And then watch for a breakout above this upper band of resistance. Then look to add to your position. Hey, Franklin. You're very welcome, my friend. Always leaves me a nice note. How did you come up with 101 on Baidu? Let's go back to it. I just take my crayon out, brother. That's it. I don't make the numbers up. I keep it very, very easy. I take my crayon out. I take a look at where there's been resistance above, 101.40, give or take a dime, right? It may be a little bit higher. Maybe up here, 105. But ultimately, I think we break support and we head down lower. I got you on the list, TA. Risky and big and not trade June, IWM, 55. Not a recommendation. You're welcome, Eric. $55 puts on IWM. What month? June? Wow, you balls. Balls. Let's take a look at that. Man, I thought I was a bear. You got me beat by a long shot. I won't say that you're wrong. Who am I? Okay, let's move on here. Next up, TA. All right, I'm going to blow my own horn here because I'm right. I'm wrong a lot too. And I admit when I'm wrong. So when I'm right, I'm going to take a victory lap. Damn, I'm going to do that. All right, so we warned about Boeing a long time ago. Back here, I did a video on it. Search my videos. Type in Boeing or BA. I forgot. I put it on the title, and you'll find that video. I warned about this head and shoulders setup on a monthly chart and that we would probably break. We have broken and then some. I did not expect this sell-off. That I will not claim. What do I see happening here? Before I answer that question, I want to take a look at the daily price action. The reason why I'm pausing is because they sent out that headline today, that article on Zero Hedge, that they were offering buyouts to 161,000 employees. It's a lot of employees. And this is not a business that you go hiring on the street corner for day workers. These are literally rocket scientists. So that's concerning. That's really, really concerning. And even if they're not rocket scientists, these are high-skilled employees. They don't grow on trees. So that concerns me about the longer-term health of the business in and of itself. And what I was looking for in a daily chart, if I were to have looked at this chart today, given that announcement, and I would have seen that Boeing had closed up on the day, I would have said, okay, maybe we do have a short-term bottom here. We didn't. We closed just off the lows of the day on volume. So we still have institutional distribution of Boeing. Now, before I answer the question, would I buy it here? You like that, Faris? I like your call, man. I'm not knocking it. Who am I? On a weekly chart, I mean, we're underperforming the market by a long shot here. So we have relative weakness on Boeing. I believe that in the short term, and I'm going to try to validate my intuition here. I'll start with a 4-hour chart. And it's semi being validated. I think we're going to rally on Boeing. Here's what jumped out at me first. RSI. And you may be saying it's declining. What are you talking about? Fair enough. Let me take my crayon out. Do this. We're in an orderly pullback here. And I'm not going to call this a cup with a handle. But goddamn. Gosh darn. Got to be YouTube friendly, family friendly. I'm liking this. Stokes are coming in, which is good. Initial price target. The obvious is the recent high. Do we get up that high? I don't know. I'm not that smart. This could be the high. Clearly resistance here at 140. So to put this much capital to work, I have $10 upside before I hit stiff resistance. I don't know how many shorts are in this name, but I don't think there are enough yet for me to take that risk. Now, if we were to pull back, to a support level on Boeing, all the money I pay, they do this to me all the time. 500 charts, that's it per list. I have to go in, I have to delete all my charts. Put a lot of work into those charts. All right, I digress. I'd like to see us pull back down here. TA, 116.13. I think that at that price point, we get a higher low. And you could look to put on a long trade with a stop right below it. Maybe even down here to 112. That would be really ideal. If they sell it off tomorrow, that would be really good. You nibble at that price point, and then if they're able to sell it off tomorrow morning really hard, and then you have buyers come in at one or both of these price points, and they rally it to close up on the day, a bullish key reversal day, that would be a buy. That would have me in all day long. So I would nibble down here, and then I would add more on a bullish reversal day. But the S&P 500 has to be up as well. If the S&P 500 is down, we see a short squeeze on Boeing, I'm not going to trade that. And I'd like to see a breakout in RSI, pullback and a retest. That's what I'll be looking for on Boeing. I like it. But longer term, I think we're rolling over. I think this is a short-term swing trade, and then ultimately we're rolling over. INSG, this is for Pat. I usually use TrendSpider. For INSG, excuse me, for INSG, so the macro view, it's a monthly chart, it's a macro view, is that we have a lot of sellers above here. And while we broke out above the upper band of resistance back in December of this uptrend channel, we have since failed. And we retraced last month down to the lower band of support. This month, a huge gap up. And we're back above 6.86, which is, actually, no, we didn't close there, did we? No, we closed 2 pennies shy. Let's just say we closed at it. 6 of one, half dozen of the other. We just closed shy of support. But with the upper band of this trading range, therefore, I can't buy it. We have resistance immediately above. Too much risk, not enough reward. Weekly chart. Again, we have a nice week, nice move up. The problem is this. I want you to pay. Let's get rid of this line here. Get rid of that. Just to clean this up a little bit. What you're seeing here is a megaphone formation. A megaphone formation is the inverse of an ascending or descending wedge formation. In short, you have a pattern which allows for higher highs and also lower lows. So we're rallying right up and into that resistance level. I'm expecting that we'll probably roll back over again and retest the lows of this trading range. I can't buy these shares right now. Daily chart. So the weekly chart and the monthly chart provide us our macro trend, our macro view. Where do we think that it's going longer term? When you take a look at a daily chart or an intraday chart, you just may have a short-term swing trade where you're in and you're out. So, do we have one of those trades with INSG? Maybe. You have a bit of a triangle formation. If you, in your heart of hearts, let's see how we close out the day. Let's go to a 2-hour chart. If in your heart of hearts you believe you had a strong close, and we did, and it's not a strong close in terms of we closed at the highs of the day. We did not. But what we did is that we gapped up and we consolidated all day. That allows for another pop-up higher tomorrow morning. So what I would do here I would wait. And this, again, is only a short-term swing trade. A day, 2 days, maybe 3 days, who knows? I'd be looking for an intraday breakout above resistance. And my alert's set. If we pop up higher, I look to see whether or not we retest this breakout point. We hold that first 2 hours of trade tomorrow, maybe an hour, half hour, whatever you feel comfortable with. And then look to add more on a new daily high, assuming that the market is moving up as well. And then look to book profits into this upper band of resistance at around $8.04. And then I would be out. That would be my trade on INSG. Longer term, I think we're pulling back. We're at that upper band of resistance on a weekly and monthly basis. Daily chart looking okay intraday. We'll probably get a pop tomorrow. Does it hold? That's the big question. Right? So be careful here. You bet, TA. NSRGY. Nestle. I'm torn here on Nestle because it's a food company and the food companies are doing well. They're selling a lot of food. People are hoarding. And they make some pretty goddamn good cookies and hot chocolate. I think they make Swiss Miss. Love Swiss Miss. Those little marshmallows. The problem is, going back to the technicals. You're welcome, Pat. The problem is, going back to the technicals, is that we put in a double top and we gave up support last month. This month, we're making an effort to try to recapture it. I don't think it looks good. Maybe the narrative, maybe the food hoarding narrative will take over the technicals and we'll close back above it. I'm not saying it won't. I'm just saying that from the technical perspective, at current, it doesn't look good. Lower highs on Stokes and also lower lows. Same deal here. Lower highs and lower lows. And that's on a monthly chart. Weekly view. Oops. Weekly view again. Ah. Be careful. Again, I'm torn. I think what's happening here is the narrative, the food hoarding narrative, is being priced in to the chart. But keep in mind that this too shall pass, meaning the CCP virus. And this company's technicals were going well before the CCP virus. So, is this sustainable? That's the question that you need to be satisfied with before you execute a trade. I don't think it is. Maybe for a couple of more months, I don't think it is. Now, a beautiful 3-week rally, but we are into resistance. If we close out the week above 104.11, very bullish from a short-term swing trade perspective. Now, I will point this out, and this runs counter to my negativity on the technicals. We saw the same thing on the GDX, higher low on the stochastics. No breakout yet on RSI. We're still in a downtrend. So what I would do here, if you're entertaining putting on a trade, I would wait and see whether or not we're able to, 4 p.m. or 3:59 tomorrow afternoon Eastern Standard Time, are we trading above or below 104 per share? If we're trading above it and you're looking to put on a short-term swing trade, go for it. If we're not, that means we're closing out the week back down below a support level. I would avoid daily chart. Today, a very nice day. You know what? I don't like this. Let's remove that. What do I want to do here? Let's do this. This is for a swing trade only. All right. So you're dead set. You're going to buy Nestle no matter what Desmond says. I don't care what the monthly charts say. I don't care about your food narrative. It's a bunch of baloney. I'm buying Nestle. I don't care. Just tell me when to buy it. When would you buy it? I put a gun to your head. When are you going to buy it, Bob? Okay, this is what I would do. Me personally, what we did today is we broke out above this upper band of resistance here. I would wait for a pullback and a retest of 102.48. Now, the problem is that goes against what I just said about the weekly chart. Because we closed down below 104, I would avoid the trade on a weekly basis because we failed to hold the breakout on a weekly basis. So you're going to have to take that round peg of wanting to buy these shares come hella high water and fit it into that weekly chart, which just told you, which is the square peg, that, you know what, be careful here. They aren't fitting. You're not getting your breakout, which you need for that short-term swing trade to rally. Now, let's go into next week. New week. We closed above 104 this week. I would like to see a pullback and a retest of either this breakout point and or 102.487. If we get that, keeping in mind that 104 is support and we're back down below it again next week, where's my stop loss? You guessed it, right here, 102 per share. I am out. Keep my loss small, and then I would add more. If I don't get stopped out, I would add more on higher highs. Then look, God, I could talk all night long about this. I've gone so far over. I'm a half hour over. I would look for resistance immediately above at 106, which is not that far above, to be honest with you. So be careful here. Remember weekly and monthly resistance. Daily is looking interesting. I'll give you that. HSBC, that short's come and gone, brother. I talked about HSBC a while ago. I haven't looked at it, to be honest with you. Wow. It was up in the 30s when I was talking about shorting it. They're doomed. They're doomed. I think that they get, what is it? 90% of their profits from Hong Kong, from China. I think they're doomed. Who's going to bail them out? The Brits? Not going to be the Chinese. So, is it time to short it? No, I think you're probably going to get a short squeeze here, if anything. Matter of fact, I'm thinking about it now. Let's research it. Let's take a look at it. The first thing we want to do is, you got me. You got me to do this. I love it. Yeah. This is all good stuff. What I want to do first is I want to bring up my Bollingers. I have the 2 standard up. I want to bring up the ever-present 3 standard deviation. Where are my 2? I deleted them. That's right, 2 is accurate. Make them green. Now we're good to go. We're rallying here. We're going to rally. We may go a little bit lower. Ideally, down here to a 22 handle. And that could be there tomorrow. But we are going to rally here. We're trading down below the 3rd standard deviation Bollinger Band. Weekly chart. Man. I think we need to go lower. We may not, though. And I'll tell you why in a moment. It's on the daily chart. Volume still very, very high. Here's the rollover on Stokes. That's good. All right, so daily chart. We rallied off the lows of the day today. Might we still go lower? This is like an indecision bar. It's a hollow candlestick. It's a sign of indecision. So what we may do is what we did back here. The last time we saw a hollow candlestick at the lows of a trading range, we may rally for a few days. I don't know whether or not I would join in on this trade. I think I would need to see it a little bit lower for me to get all excited about it. That 22 handle excites me. Where we're at right now is it's at support, but a weak stock like this needs to go to extremes. Where's our RSI? RSI's only got 27. I'm not going to trade it until it goes lower. But it's an interesting trade. And with that, folks, 8 a.m. tomorrow morning, please join. Please hit that like button, subscribe, share with a friend. Please help me get that subscriber count up over. Be that 2,000th person, please. I beg of you. And everybody, follow me on Twitter, too. Everybody have a great evening, and I'll talk to you tomorrow. Be well.